Your rent is due in 3 weeks, and you're already stressed about next month's payment. What if 6 stocks could literally pay your entire rent every single month? Some people are collecting $2,000 plus monthly from these dividend powerhouses while you're scrambling to make rent payments. Warren Buffett said, "I love dividends because they represent direct cash return on your investment, no matter what the market is doing." So, let's turn your rent into passive income. Here's what we're covering. First, why monthly dividend stocks are the ultimate game changer for paycheck-to-paycheck living. Then, 6 specific stocks that could eliminate rent payments forever, ranked from conservative to aggressive, with yields from 4.23% to 22.5%. I'll show the exact math behind each investment and the precise amount needed to generate $2,000 monthly. Finally, 3 bonus strategies most investors miss, including techniques professionals use but rarely discuss publicly. Quick note: the yields mentioned in this video are as of June 2025 and can fluctuate significantly. High-yield stocks carry substantial risks, including potential dividend cuts, NAV erosion, and principal losses. This is educational content only. Always consult with a financial advisor and do your own research before investing. Before we jump into these rent-paying stocks, let me paint you a picture. It's the first of the month, and instead of dreading your rent payment, you're excited. Why? Because 3 days ago, dividend payments from your monthly stocks hit your account. Not just a few dollars, enough to cover your entire rent, with money left over. This is the reality for investors who understand the power of monthly dividend stocks. See, most people think dividends are just small bonuses that companies throw to shareholders. But monthly dividend companies? They're built differently. These companies generate such consistent cash flow that they can afford to pay shareholders every 30 days instead of every 90 days like most stocks. That means instead of waiting 3 months between dividend payments, you're getting paid as often as you pay rent. It's like having a tenant who never misses a payment, except you're the one collecting the rent check. So stop thinking about dividends as pocket change and start seeing them for what they really are: your ticket to financial breathing room. These 6 stocks aren't just investments. They're your future rent payments walking around in corporate form. Stock number 6, STAG Industrial. Starting our countdown at number 6, we have STAG Industrial, yielding 4.08% as of June 2025. Now, before you scroll past because that yield seems low, understand this. STAG represents the foundation any serious dividend portfolio needs. STAG owns industrial warehouses, the exact properties that became gold mines during the pandemic, when everyone started ordering everything online. This real estate investment trust has delivered 7 consecutive years of dividend increases, currently paying 12 cents and 24 hundredths of a dollar monthly. Their recent Q1 2025 results showed 149% earnings growth with 95.9% occupancy across 597 buildings. The dividend is covered at a conservative 59% payout ratio, meaning they earn $1.70 for every dollar they pay out. While 4.08% might not sound exciting, it's the kind of reliable, growing income that wealthy investors build their portfolios around. Stock number 5, Realty Income. At number 5, we have the undisputed king of monthly dividends, Realty Income, yielding 5.6%. This company literally trademarked the monthly dividend company, and they've earned that title through 30 years of consistent performance. They've paid 658 consecutive monthly dividends without a single miss or cut. Since going public, Realty Income has increased its dividend over 100 times, growing at 4.5% annually. They're officially a dividend aristocrat, meaning 25-plus years of consecutive dividend increases. Currently paying 26 cents monthly, they own over 15,600 properties leased to reliable tenants like Walgreens, Dollar General, and Home Depot. However, Realty Income carries $28 billion in debt, making it sensitive to interest rate changes. However, their diverse tenant base and long-term lease structure provide significant defensive characteristics. Stock number 4, Oxford Square Capital. Oxford Square Capital shows an eye-popping 18.67% dividend yield, but don't let that number fool you. Right now, they're paying out nearly 5 times what they actually earn, a payout ratio of 466%. That's a major red flag. This kind of setup usually means a dividend cut is coming, and when that happens, both your income and the stock price can drop fast. AXSQ lends money to small to mid-sized businesses that banks often avoid, which can be profitable but risky. If you're chasing high yield and can stomach the possibility of losing money, it's a speculative play. But this is not for anyone looking for stability or long-term security. Stock number 3, Orchid Island Capital. Orchid Island Capital offers a juicy 20.38% yield, but it comes with a complex business model and serious risk. They invest in mortgage-backed securities. Essentially, they buy up bundles of home loans and earn money from homeowner interest payments. But here's the issue. Orchid uses leverage to boost returns, meaning they borrow a lot to invest. That makes their performance sensitive to interest rates. When rates rise, their profits can shrink and the stock price can take a hit. While the monthly income looks great on paper, the underlying stock value can erode over time. This is not a hands-off investment. It requires close monitoring and a strong stomach for volatility. Stock number 2, ARMOUR Residential REIT. ARMOUR comes in with a strong 17.34% yield, focusing on government-backed mortgages like those guaranteed by Fannie Mae and Freddie Mac. This sounds safer, and in some ways it is. But don't get too comfortable. Even with that backing, interest rate swings can still damage book value and lead to shrinking dividends. In fact, in just Q1 2025, ARMOUR's book value dropped from $19.07 to $18.59. It's better covered than some others in this list, but there's still a real risk your investment loses value, even as the dividends keep coming. Use it for income, but don't rely on it for capital growth. Stock number 1, Horizon Technology Finance HRZN. The top yielder on our list is Horizon Technology Finance HRZN, offering an 18.26% annual dividend. HRZN pays 11 cents monthly, totaling $1.32 annually, and trades near $7.23 with a market cap just over $300 million. As a business development company, it follows a secured venture lending model targeting sectors like tech, life sciences, and healthcare IT. Its debt portfolio yielded approximately 15% at the end of Q1 2025, supported by a $236 million committed loan backlog. HRZN regularly generates approximately 27 cents in net investment income per share, supporting its 33 cents quarterly distribution through at least Q3 2025. However, its payout exceeds 100% of earnings and cash flow, exposing it to risk if lending activity or repayment quality declines. Despite that, the combination of monthly income, secured lending, and a yield far above its 5-year average makes HRZN our top pick. The math breakdown. Now, let's get to the big question. How much do you need to earn $2,000 per month in dividends? We're using the advertised yields, but keep in mind, many of these high yields aren't sustainable long-term. Using equal investments across these stocks, the average yield is approximately 13.2%. To generate $2,000 monthly, $24,000 annually, you'd need roughly $182,000 invested. However, this calculation assumes all dividends continue at current rates, which history shows is unlikely for high-yield stocks. A more realistic approach would focus on sustainable yields of 4 to 6%, requiring $400,000 to $600,000 for $2,000 monthly income. You made it this far. Now here are 3 pro-level dividend strategies most investors never hear about. Bonus tip number 1. Ex-Dividend timing hack. Buy 2 to 3 days before the ex-dividend date and sell shortly after. Some stocks spike before payouts. Done right, this can add 1 to 2% to annual returns while still collecting dividends. Bonus tip number 2. Double income covered call trick. Own 100 plus shares? Sell covered calls for extra monthly income on top of dividends. Example: STAG's 4.08% dividend plus 0.5 to 1% from options equals more yield, same shares. Bonus tip number 3, cash flow laddering strategy. Buy stocks on staggered dates to receive payouts throughout the month. More frequent cash flow, better reinvestment flexibility, smoother income. Before we wrap up, smash that like button and subscribe for more strategies to build real wealth without waiting decades. Thanks for watching, and I'll see you in the next video, where we'll turn small investments into life-changing income. Remember, simplify money, muchify wealth, one smart decision at a time.